L&T share buyback has hit a wall as SEBI has denied its 9,000 crore rupee buyback. L&T, which for the first time took such a drastic step to rectify its capital allocation, is now back in the muddle. Let's do a three-point analysis of what this means for L&T. 1. What are the hurdles the company is facing on share buyback? While L&T's standalone debt to equity makes it qualify for the buyback, the consolidated balance sheet, including financial subsidiaries, typically having high leverage, becomes a major hurdle for the buyback. Now, in the year 2008, L&T had 81 subsidiaries, which grew to 123 by the end of FY17. Now, this has been a major investor apprehension, particularly because majority of companies are making losses. 2. What's the company's financial situation? The company's standalone debt to equity is at only 0.21 times as of FY18. Even after paying down some of its debt, L&T continues to sit on large cash, which is not productively being used other than generating treasury income. On a standalone basis, the company has a cash and cash equivalent of about 8,500 crore rupees. L&T's return on equity over the last 5 years also stood at an average of 11.9%. Now, buyback would have been both value accretive and tax effective to return back the money to its shareholders. Our calculations suggest that buyback would have reduced its equity by about 16% and resulted in over 155 basis points improvement in the return to equity. Now, buyback would have been a great deal for the existing shareholders as well. 3. What's next for L&T now? Well, most brokerage houses are of the view that buyback denial by SEBI on the technicality of leverage has actually come as a negative surprise. However, they still maintain their bullish stance on the company for long term. The ball is now in L&T's court to decide what's the future course. Paying dividend would attract large tax outflow. However, keeping large idle cash would raise investor apprehensions as well. In the light of all of this, it would be worth watching how the company is really going to create value for its shareholders now with the buyback window closing down.